John Higgins, Mortgage One. Happy Monday. So it's Fed week. What can we say? 14 months ago, the Fed made their last rate increase to 5.5% on the Fed funds rate. That was off of historic lows, obviously, that we saw coming out of the pandemic. So they went very, very restrictive. Now seems to be the time that they can start to back off that a little bit. We've got some good inflation numbers. The jobs numbers have started to soften a bit. The Fed is concerned about being too restrictive, kind of choking off the economy and ruining the jobs market in that. And they're trying to affect what they call a soft landing. So if they can pull back this restrictive policy, go more towards neutral, hoping that the glide path as far as the economy, it won't go negative. So it's a very difficult task to pull off. I think the Fed is usually not been very good at affecting a soft landing, but they're going to try here. With the September meeting, they're probably going to go 25 basis points, be a little cautious. There is talk of maybe 50 basis points. And then over the next several months, it looks like the Fed will continue at each next meeting, maybe to take off another 0.25%. Now, what does all this mean for our mortgage rates? Overall, the tone, the second half of the year has been much better. If we remember, going into this year, the Fed said they were going to cut 3 times, and then all the numbers that came out with regards to inflation and jobs numbers kind of ended up being a bit higher than the Fed expected, and certainly what the market expected. So the talk of any Fed rate cuts were dashed early in the year. Now, as we head towards the end of the year, the Fed is certainly ready to go. So now we're seeing interest rates roll back below what we saw this past January, and really the lowest rates we've seen maybe in the last 18 months. So it's all great news for home affordability. Hopefully, as these rates, head closer to 6%, maybe early next year, we actually see rates maybe in the 5% if we get lucky. Get more sellers out there, help the equilibrium in the market between buyers and sellers. We know this real estate market has really suffered for a lack of inventory. So lower rates should spur more buyers, which probably means that the sellers will continue to have a bit of an upper hand, but hopefully we get a little more inventory. So pay attention to what the Fed says around this meeting. They should talk about, being cautious and all the rest. But in the end, I think they're going to continue to cut. The market's already priced in 3 rate cuts, so 75 basis points probably over the next 2 meetings. But the Fed could be a little more cautious, and we know that the market got it wrong earlier this year. So be thankful for what we've got here. We're finally starting to see rates moderate. It seems like forever that rates have actually turned around and started to head lower. So we'll keep the faith that rates continue to moderate here. Home affordability gets a little bit better. And we'll give you an update next week after we hear what the Fed has to say around this meeting. Have a great week.